Hello and welcome to your Daily 5. My name is Greg Harmon. I'm the founder and president of Dragonfly Capital Management. At Dragonfly Capital Management, we manage separate accounts for clients. We use technical analysis to determine stocks that are good for a portfolio for a medium to long-term investor, and use options overlays on top of that to help manage risk. Additionally, for those that want to manage their own portfolios, we put out a newsletter on a weekly basis that gives ideas around stocks to trade for the coming week, using both the stock and options. Today, I'm going to talk about something that is maybe a little bit controversial: the expansion of the recovery. Not the recovery of the economy, but the recovery of stocks. Why is that controversial, you say? Stocks are now in the S&P up on the year, the NASDAQ up, something around 20% on the year. Why is this controversial? Well, the controversy lies in how we are getting there. The narrative that prevails in the market talks about the stock market being up and being driven by technology, all technology stocks. And the last time I was on, about a month ago, we talked about two subjects around that matter: the return to normalcy and the stocks that were winning because of that, stocks like Amazon, stocks like Lululemon, and a second piece, stocks that were winning because of the new normal, how things are going to be in the future. Stocks like DocuSign, stocks like Zoom Communications that are taking over the world. So there were two paths, but all of these paths were really heading towards technology leading the step forward. As we talk about the stock market now, we also talk about somewhere between 20 and 30% of the market cap of the major indexes being made up of 4 or 5 different stocks. And you know what stocks they are: the FAANG or FAANG or whatever acronym you have for it. Microsoft, Apple, Amazon, Netflix, Alphabet, which is the G in Google. And we're getting that narrative from the broader market participation that this is a bad thing, that these 5 stocks are the only ones driving the market higher, and there's nothing beyond that. Well, today I want to talk about some aspects within tech that are catching up, as well as how this is broadening out to being outside of just the tech sector. So let's start with the 5 stocks today. The first one is Enphase Energy. And I could have picked a lot of different stocks here. But Enphase Energy, the chart I'm showing here shows an ABCD pattern that's building here. It would give a target of 107 on the D leg, so not drawn to scale here. But from 62 to 107 gives a lot of upside potential here. What I want to point out, though, is a few things. One, we've got a series of higher highs and higher lows building up, with momentum building to be very strong, both on the RSI and the MACD. This stock is in the solar sector. And there are at least 5 stocks in the solar sector that are now starting to lead the technology aspect of the market higher. So it's not just the cloud stocks. It's not just the software as a service stocks. It's not just the new economy stocks that are driving this forward now, but also broad-based things like changes in energy, changes in consumer preferences that are starting to drive what's happening within the winners in the marketplace. So keep an eye on the solar sector here. Many of them have broken out. I think this is the best opportunity right now, Enphase. Moving outside the solar sector, how about this one? Dick's Sporting Goods. I don't know about you, but I get at least one email every day from Dick's talking about how they're selling things and how they're selling it online, and how they've got contactless delivery, well, contactless pickup or delivery. And there's one of these stores in every town, right? Every mall has a Dick's. And they've got everything you need now. Now that you're working from home, now you're staying at home, it's all athletic wear all day long. And what's happening with this stock now? It's back near its January highs, and just this week started to break out again above a consolidation zone in the June-July timeframe. So here's an opportunity in the consumer cyclical sector, an old school name that is now breaking out to new highs. It's not just the new guard, Lululemon. Momentum picking up here. We've got a great MACD cross here, which is a bullish positive for us as well. Other leaders that are starting to show themselves, the healthcare sector. And when you think of healthcare, you think of, okay, well, yeah, that makes a lot of sense. The vaccine companies that are making that, either development to the biotech side, or the Pfizers and AstraZenecas that will be the producers, those would be big winners. But here's a different one, Patterson Dental Company. Okay, before you start thinking about a broad-based dental company, this is for pet dentistry. This is for your pets, for brushing your dog's teeth, etc. And we're breaking out to new all-time highs here. We've also started to see rotation into the industrial sector. Here's one, you're probably familiar with Home Depot, you're probably familiar with Lowe's as being home improvement sites. Trex. Trex makes decking, synthetically produced decking to put on your house, to build outside your house. And here we are seeing Trex, a smaller industrial name, breaking out to all-time highs as well. The last of the five that I have to talk about is a company called Albermarle. And Albermarle is in the basic materials sector. This is a chemical company. And chemical companies are starting to see the light of day as well. Look towards Olin, look towards DuPont. These are companies that are also starting to break out. Momentum's strong and building here. We've got push towards all-time highs again, and above prior resistance. So what's the basic theme to take away from today? We've been led to where we are so far by the tech sector, by the biotechs that are looking to develop vaccines, the hot, sexy names that have been out there. What's happening now, though? The recovery in the markets is showing some broad-based expansion. We're bringing in consumer cyclicals, we're bringing in healthcare, we're bringing in industrials, we're bringing in basic materials. What else do we need? Financials. Financials will be the thing that throws the whole thing into overdrive. So keep an eye on these new sectors and look out with your second eye onto the financials to see where this market may be going in the future. That's your Daily 5. Thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.